Moving along now, many South African companies have been losing value created over the years due to various reasons. This was also due to the economic downturn and a recession that was imminent. The COVID-19 pandemic made the situation worse, with some of them having to halt operations during the lockdown. To make sense of all of this, the lowdown is Nadir Thokan, is economic analyst at 27/4, and he joins me now live via Zoom. Good afternoon to you, Nadir. Thank you so much for joining us here on the SABC News channel.
Yeah, thanks so much for having me. Just a quick correction. It's actually Korean capital, not 27/4.
Thank you so much for that correction. So as we break it down, one of the big companies took a tailspin during to accounting practices. Is this trend sort of going to continue?
Yeah, okay, so just some quick context to this. So at Korean Capital, we've done some research just in terms of how much value has been destroyed for shareholders basically over the course of the last 5 years, and how bad the sell-off has been in some of the big shares on the JSE. So essentially what we did is that we've taken 10 companies that have witnessed large write-downs over the course of the last 5 years. So these range from Steinhoff to MTN to Sasol to Massmart, which are brands that everybody would be familiar with. And then there's some lesser known ones that perhaps the public aren't that aware of. So like the likes of Ascendus, the likes of Rates, I guess that was quite a big write-off. Woolworths, the public would be very aware of. And what we've ultimately said is that between these 10 companies, there's essentially been around 978 billion rand of value destroyed over the course of the last 5 years. I mean, that's an exceedingly disappointing number, and has been quite a major contributor towards a very disappointing performance we've seen from the JSE over the course of the last 5 years. So you quite correctly pointed out that there were accounting irregularities at the likes of Steinhoff, and that's destroyed in the region of 280 billion rand for shareholders over the course of the last 5 years. Other accounting scandals include the like of Tongaat Hewlett, where we've seen the write-downs of or capital destroyed basically of just above 17 billion rand. Those are the two real major accounting irregularities. EOH potentially somewhat falling into that bucket, but not really. And that was about another 8 or 9 billion rand of value destroyed. But the rest of the examples, on our research of the top 10 companies, has quite disappointingly just been very poor investment decisions made by management. Whether it was a famous brands entering the UK, whether it was Woolies buying David Jones in Australia, and that's destroyed, somewhere in the region of 60 billion rand, whether it was Braid buying the UK business, New Look, and entering the UK market in a big way, that's destroyed somewhere in the region of 50 billion rand. Resilient, the listed property sector, that's obviously gone through a torrid time. That's also some accounting irregularities over there. I think the big takeaway from this is that there's been a number of missteps, from JSE listed companies. And the reality is that, if we want to see sustainably better returns into the future, we need to see, tighter accounting regulations. We need to see better capital allocation decisions from these companies. We need to see them being held to a higher standard of accounts from their shareholders, and that's where corporate governance really comes into it. And all of us within the financial services industry value chain are holding those management teams to account for the poor decisions they're making. And then some of them as well has been a function of the very weak backdrop in South Africa. So Massmart has lost an incredible amount of value, and that's been on the back of, Game really struggling, Macro really struggling, retail in South Africa really struggling, some 25 or 26 billion rand destroyed on the back of, Massmart going through a really torrid time. And ultimately, a number of these companies looking for opportunities outside the borders of South Africa because they claim there's no growth opportunities here. So, I think it's been a culmination of a lot of factors, but ultimately the big takeaway for us is that, these companies definitely need to make far better capital allocation decisions, if we're going to see better returns in the future.
So, Nadir, when we look at some of the suspicious transactions, can then they not be flagged before they even happen? Are there any ways really to sort of flag them before they could happen?
Yeah, so I think that's really where active shareholding really needs to come to the fore. As shareholders in a number of these listed companies, I think that shareholders need to command greater degrees of accountability from management. So Sasol has actually been a great example, where essentially they've lost 190 billion rand of market cap over the course of the last 5 years. And that's on the back of a very poor capital allocation decision that they made, in the US, where there was delays in terms of bringing their Lake Charles chemical project online. In terms of some of the accounting scandals we've seen, shareholders need to hold management to account in terms of, taking governance more seriously, taking auditing more seriously. The rotation of auditors is something that's of critical importance. So a number of these companies, Tongaat, for example, had the same auditor for over 90 years. Steinhoff had the same auditor for many, many years, decades, in fact. And then one questions the independence of these auditors when they're getting a whole lot of work, outside of auditing those companies. They get consulting work, and one then really questions their independence. So I think in terms of flagging them before the events happen, I think shareholders have a role to play in terms of, one, holding companies to account to make better capital allocation decisions, and wanting to invest outside the borders of South Africa because there's no growth here is not a good enough reason. We have to be a lot more circumspect in terms of where we're actually allocating this capital. Can we earn a rate of return on these projects? Do the management teams have a competitive advantage in terms of running those assets? If they're buying an asset from an offshore business, why aren't there other bidders coming to the party? So I think shareholders really can't be caught napping at the wheel, and really need to be holding these companies to a much higher standard of account in terms of their investment decision making and the governance processes that they have within their business.
All right, time constraints, Nadir, we have to leave it at that, but thank you so much for joining us this afternoon.